The city's in turmoil today over the latest figures on inflation, which have just come out from the Office for National Statistics. But what is all this fuss about, really? Well, the rate of inflation is stuck at 8.7%. Now, that's the same as it was last month, which might not sound too bad, but the problem is the city and economists had been hoping that those figures were going to come down. Inflation has a huge impact on all of us, everybody, families, individuals, and also on firms. Just to explain it in very simple terms, basically what this is doing is showing whether your spending power has improved or whether it's got worse. How does it actually affect you? Well, inflation affects us in a myriad different ways. It affects, obviously, our wages and our salaries. It affects the price of the shopping that we do at the checkout every week, and it affects the price of the petrol that we put in the garage forecourts into our cars. It also has a big impact on companies. Wage demands go up in line with inflation, so it fuels the industrial disputes, all the strikes that we've seen in the past few months and over the past year. It also has a great big impact on the government. The government's borrowing a lot of money right now, and a lot of the interest on that debt is linked to inflation. So the government's bills are going up just in the same way as are yours and mine. But perhaps the biggest effect of all, and the most important for all of us, is the effect that it's having on the mortgage market and on housing. Why is that the case? Well, because mortgage rates have been going up linked with the rises in inflation. And that could spell trouble not only for the borrowers concerned, but also for the government itself. So what should the government be doing about combating inflation? It's actually the job of the Bank of England to be curbing inflation. In fact, it's really the main, it's not the only job, but it's certainly the main job of Governor of the Bank of England, Andrew Bailey, to do that. He's supposed to keep inflation within a target of 2%, there or thereabouts. Now, clearly, at 8.7%, it's way above that target. So he's got a lot of hard work ahead of him to try and bring it to heel. How's he going to do that? Well, the main tool he has in his toolbox are interest rates. And what he's been doing is raising interest rates. We've seen interest rates go up 12 times out of the past 12 months. And we're now expecting tomorrow another big hike. And this isn't going to go away in a hurry either, because inflation is so much above the target that it is likely that there will be more pain to come. At this point, you might be wondering, well, why is he putting up interest rates in the hope of bringing down inflation? What's the link? Well, in theory, it's a really simple one. When interest rates go up, the cost of people's mortgage repayments and the interest on any other borrowing they might have on credit cards or personal loans goes up. So that means less money to spend on other things. Less money to spend on other things means that prices are not being driven up by consumers who are flashing their cash. So what exactly does it mean for me in practical terms? Well, interest rates have already gone up considerably, as I was saying, so they've risen from less than 1% to 4.5%. They could go up even further. They almost certainly will go up even further tomorrow, and markets are now expecting they could carry on rising to around 6%, possibly even more. We haven't seen rates of that level for a very, very long time. There's a whole generation of people, generation of home buyers who have just got used to low interest rates as a way of life. Now, those of you of around my age or a bit older might be thinking to themselves, well, when we bought our houses, interest rates were way, way above that level. I can remember when I bought my first flat, I thought I'd done brilliantly well to get a mortgage at about 9%. The difference now, though, is that property prices in relation to people's earnings are a much larger proportion, so it's still hard work to service that mortgage debt. What might it mean in pounds and pence? Well, the Resolution Foundation has looked at that, and they're estimating that for an average person, an average mortgage holder, it could be just under £3,000 a year in additional repayments. By this stage, you're probably wondering who or what exactly is to blame for this situation that we find ourselves in. Governor Andrew Bailey is pretty keen to pin all the blame on COVID. He's also quite keen to point to Vladimir Putin's invasion of Ukraine. Now that's a genuine culprit. That invasion pushed up energy prices on world markets, and that certainly led to an increase in our domestic energy bills, as we've seen, and also petrol at the pumps. However, not all of the blame can be pinned on those factors. They're global factors, but inflation has come down much more quickly in other developed countries such as the United States, where it's now at only 4%, and also in other European countries. So what is different about Britain? Good question. One of the things that's different about Britain is that we have a very acute labour shortage. So employers are finding it harder to recruit people. That means that they're having to pay more in wages to attract people to take a job with them. And that in turn is fueling the whole spiral. Another reason why inflation is now looking so out of control is Governor Bailey himself. He kept saying inflation is temporary, it's transient, it's going to sort itself out. Well, it didn't, and we are where we are now. Another big culprit are the trade unions and their sometimes excessive pay demands. Now, however much sympathy we might have with them, the reality is that if you start granting large pay increases to people, then inflation gets embedded into the system, it becomes rooted in, and it becomes harder to cure. Well, the big question, of course, is what are we going to do about it? It doesn't really matter in some senses who's to blame. How do we get ourselves out of this mess? The government's hands are slightly tied, but there are some things that it could do to combat the issue and to get the economy moving again. It could bring in measures to increase innovation and to help productivity, which has been a problem that's beset the UK economy for years. One idea that's being bandied about at the moment quite a lot is that perhaps the government could offer some sort of a bailout package to help struggling home buyers. That, tempting though it may seem, particularly since the government could enter into a housing crisis in the run-up to the next election, that's probably a very, very bad idea. Why? Well, it's pretty unpalatable, I think, to a lot of people who are still renting their homes and would love to get on the housing ladder, to see people who've got a valuable asset in the shape of a house being bailed out. The other thing to say here is that not all home buyers are going to be in serious trouble. Lots of people have got a lot of equity in their houses, and although it's going to be a bit painful for them, they actually would be able to get through this. They don't really need to be bailed out at the expense of other taxpayers. Now, what I do think really ought to be done is I think the banks and building societies, those big mortgage lenders, they need to step up to the plate and they need to help the borrowers who really are genuinely in hardship. So they need to help people, whether it be by extending the term of the loan or giving them a few months interest-free, maybe allowing them a holiday, and when things get back on track, that they can make up the difference then. I think the onus is definitely on those lenders to help rather than any kind of government lifeboat. One figure worth pointing out here, last year the major lenders made about £44 billion between them in something called net interest income. That's the difference between the borrowing rate and the savings rate. Basically, they were cashing in on this whole scenario. So they've got plenty of money sloshing around that they could use to help mortgage borrowers. And finally, the good news is that historically, the Great British housing market has just been incredibly resilient. There have been various crises, and in the long term, it's always come out that housing is a great investment, that our homes really are our castles, and that we can, usually, history tells us, weather the storm.